Welcome to the Daily Update, condensed version, where I'll quickly go over the action in the market for Monday, July 3rd, and then we'll see how things look for Wednesday, July 5th. Before we start, I just want to send a heartfelt Happy Independence Day to everybody. I know this is an American holiday, but it's still a very special holiday, and I hope you have a chance to enjoy it. So let's go back and talk about what happened. Some comments that we can make. This was the first trading day of the week, month, and quarter. So now you're going to see a lot of comparisons to the first half of 2023. What does it look like for the second half of 2023? Bank stocks had a pretty good day on Monday. There's still that growing optimism that the U.S. economy might be able to avoid a recession, but we have to keep an eye on the economic reports. If they start coming out stronger than expected, it's going to throw this whole scenario out of the water. On a short-term basis, we have the 20-period exponential moving average, the Williams percent R, the CCI 14 and 20, the stochastics, all three versions of the stochastics, the standard deviations chart, our Arun indicator, the McClellan oscillator based on the S&P, the PMO study, the RSI 9, and the boom indicator based on 20 periods. These are all extreme positive. What we're trying to figure out now is whether this is showing good momentum as we keep going higher, or are we in an overbought condition and due for some kind of a pullback. On an intermediate term basis, we're still keeping an eye on our oscillators. They're looking pretty toppy, even though some of them are starting to turn and go back up. We also have the Sean trend meter and the rate of change based on 200 periods, which that's a longer term chart, but this is more of an intermediate term look at that chart. The dollar was up and interest rates were also up. We still have all of the yield curves that we watched that remain inverted. Sentiment is extreme positive at 85 where it had been at 79. Our trend is positive, but the green line is still coming down. Even after the slight update that we saw on Monday, that green line is still declining, but it is on top, and the ADX is strengthening. It's back above its moving average, and both of them are above 20. Our bias is positive, and our momentum is positive. The economic reports that came out, this was the important one. We had the ISM Manufacturing Index, which came out at 46%. They expected it to come out at 47.1, so it was weaker than expected. Last time we had this report, it was at 46.9. The key takeaway from this is when we're at 50 or above, that means the economy is expanding. When we drop below 50, the economy is contracting. We also had total construction spending, which came in up 0.9% month over month, a lot more than the 0.4% they had expected. The last time we had this report, it did come out at 0.4%. On a year-over-year basis, that translates into being up 2.4%. To look a little deeper, we have total private construction, which was up 1.1% month over month, and total public construction came in up 0.1% month over month. Here's the intraday chart. Not an awful lot to show. We had a little bit lower open. We came down to the daily pivot, then we bounced back up off of that. Spent a lot of time right around the unchanged level before drifting higher going into the close. We're also keeping an eye on this chart. We watch the VIX very closely. Well, the VIX is acting a little strange right now, so when that happens, we look at this chart. This is a correlation between the VIX and the S&P, and we're seeing this chart starting to go back up. We're not at this dashed line yet, but when it gets above that, this is when we take notice, and something is usually in the air to happen. Whether it's positive or negative, we're not quite sure. Also, we're keeping an eye on the skew index. It bumped up. It's not quite into this red area yet, which is an extreme positive reading, and we don't really know. Once we get up into this red area, does that mean a top, a bottom, or are we going to see a continuation? We'll just keep an eye on this. Maybe it was because there was some extra hedging going on ahead of the holiday. Also, we keep an eye on our trend, where the green line is on top, but it is declining slightly. However, the ADX has moved back above the moving average, so we would default to the positive. Then looking at transports, they are coming back up to a previous high now and still showing continued strength. They're really starting to look well when we compare the Dow and transports together. When we look at the bottom, though, we saw a little bit of an improvement with the utilities, but it is not broken above this downward sloping trend line. Here's another look at the transports to S&P 500 ratio, where it ticked up just slightly and it has been advancing. If we want to see some fairly serious strength in the S&P, we want this ratio to go up. And we also look at the S&P to transports, showing that the correlation between the two is getting stronger. Keeping an eye on the NASDAQ, we still have overhead resistance above current price, which also equates to a Fibonacci retracement level. And then on the NASDAQ 100, we're coming back up to this previous high. We came up to that level and bounced back down. Are we going to be able to break through that this time and keep going higher? Or are we going to hit that and then start what could be a pullback? So what's our outlook for Wednesday? We will be closed on July 4th. The technicals are positive. They are showing improvement, but you could make a real good case that we are overbought in the short term and a little bit in the intermediate term. We have the MBA Mortgage Applications Index coming out, the AD Employment Change coming out, factory orders will also be coming out, and then the big one, possibly, will be the meeting minutes from the FOMC meeting will be released at 2 p.m. Eastern on Wednesday. The geopolitical events, we're keeping an eye on that whole situation in Russia, which now includes Belarus. We'll just have to see if anything develops that has an impact on the market. Right now, though, the market is still fixated on inflation and interest rates, and also going with the premise that growth concerns are not too much out of hand. We're not showing a lot of weakness. We're not showing a lot of strength. Here is the updated calendar so far for the week. And then looking at the Stock Traders Almanac statistics for July 5th, we're kind of negative here. The Dow is only up 38.1% of the time, or the S&P and NASDAQ are neutral to negative. Here's the chart for July, where we will be on the second trading day of the month. We do see some initial strength in the month of July before we start chopping around. When we start to see some weakness is about halfway through the month. Then we're also keeping an eye on this chart where the NASDAQ tends to perform fairly well up until about the middle part of July. So our scenarios, we can't really go with the down one right now. Our charts are just not supporting that, other than the fact that we might be short-term overbought. If we do start to pull back, then we will reevaluate things and see if it's switching to more negative. So we're still leaning more towards the positive side, but be aware that we are in overbought territory. But we can't really go with the sideways trend right now because our ADX is well above 20 and showing that we are in a strong trend. So the warning signs, the VIX is still showing that there's a lot of complacency. And then I say here that the VIX might be starting to act weird. That's why we're looking at that other chart. The cumulative new highs and new lows for the NASDAQ continue to show weakness. The 3-month yield is still above where it was back in 2007, right before the great financial crisis. Earnings season, if there's any reports that come out, they can be either positive or negative. On the positive side, we still have the parabolic SAR, which has switched back to being positive. The longer-term seasonality and setups, which I went through in the weekly video, those still remain in the background. The long-term special K chart with the daily version is switching positive, where the weekly chart is switching more negative. The long-term equity put-call ratio is turning more positive. And the S&P remains above the downtrend channel upper line. I will only start showing that chart again if we come back down to those levels. We're still in a risk-on posture. The transports are improving and could be breaking out. Lower price levels so far have held up as support. The S&P is outperforming utilities. The NASDAQ and NASDAQ 100 continue to break out, but they do have overhead resistance. As I said, the NASDAQ has a 61.8% fib retracement level to try to get above, and the NASDAQ 100 has the previous high to try to get above. We're seeing the staples to S&P 500 ratio declining, which is often positive for the S&P. The mid-caps generated a recent golden cross, and small and mid-cap growth, even though it's kind of going sideways a little bit right now, it's still overall positive. So our conclusion, the S&P is positive, it's showing improvement, but it's becoming overbought. In the short term, we are overbought, yet we remain positive. Intermediate term, we're positive, showing improvement and a little bit overbought. Where long term, we still continue to be positive. Thank you. Have a very happy 4th of July, and I will talk to you in the next video.